All right. Real quick now, we're going to jump over to Aaron Warwick. How you doing, Aaron?
Good, man. You got me. You disrupted my morning workout. I don't do much to interfere with that, but this is important. So glad to
All
be on your
right.
show, Ben. Thank you.
So I invited Aaron because he, at one point, you presented Quipt to the story
That's
trading
right.
community. I don't know, about a year ago or so. And I just noticed a lot of news flow from Quipt in the last few months. They had earnings out yesterday. 30. It says here on the newsfeed, 36.7 million beat. So 36.37 million estimate. So just wanted your take on the earnings and where you think the stock's going from here.
Yeah, the company's on fire right now, Ben. They came out like you said with the earnings. It's up 40% year over year. Their adjusted EBITDA is up 44%. So we've seen some good operating leverage. The company has been weighed down by some convertible debentures, some warrants last year. Now they've got a clean balance sheet. They just extended, I think it came out yesterday, they extended their line of credit to $80 million, which, I think is a good sign they're not going to be raising capital through the equity markets for their future acquisitions. But yeah, the company right now, as of yesterday, their release from the June quarter, on a $30 million run rate, annual run rate for adjusted EBITDA. Most of the companies in their industry trade for like 8 to 12 times what would put them about $250 million company right now. Yesterday they closed at 193 million. So I think now they got these derivatives off the books, they've got some room to run.
Okay, great. I'll ask you the same two rapid fire questions as I said. Mark,
Sure.
was there anything in yesterday's press release or conference call that was either an upside or downside surprise for you, qualitatively or quantitatively?
Yeah, good question. So yesterday they have the call today, actually 10 a.m. Eastern.
Okay.
But in
Oh,
terms
okay.
of the earnings release, there were two things upside. Number one is they talked about how they're seeing supply chain, which has been a problem. Actually, for them, it wasn't so much what most of the industries are facing. It was more specific to Philips Respironics that had trouble with one of their devices. So there's quite a backlog that Quipt has. They've been working through that, and it sounds like Philips is now catching up for that backlog. So I think there's good signs ahead for that. And then they also talked about just in general, they're really rapidly increasing their sales force right now. Quipt is, because they have an opportunity to cross-sell various products. So if they make an acquisition, and for example, the company is high in the ventilator market, they have a high concentration of ventilator for their business. Quipt will be able to layer on respiratory, and so they're hiring a sales force that's going to be able to do that. We should see even increased organic growth in the quarters and years ahead.
Okay. And last question, what do you think Quipt should be trading at? The fundamental value, we're at $5.95 in pre-market. I don't know, that's a pre-market. I don't know if that's going to probably open lower, I'd assume, but
yeah,
what do you think it's worth at?
Yeah, I mean, based upon the fundamentals, like I said, they were trading at 193 million in terms of market cap. They should be up at least in the 250 million range. So, I'm thinking $9-10 a share, like now.
Oh,
that's
wow.
what they should be trading at now. And then, of course,
Cool.
they're growing rapidly. So, I mean, they're at 100. They said they exited July at $160 million run rate for revenue. I know in the next 3 years they plan to be at 300 million, and the margins. The EBITDA margin was like 21%. They expect to be up to 25% by the time they get to that 300 million. So there's a lot of room to run. And if I could just throw in there real quick, if you look back a couple of months, Ben, you'll see they just signed a national contract with United Healthcare. They didn't announce who it was, but you can see on their website they now accept United Healthcare insurance. So they're accepting them nationwide, which is a big deal because normally it goes state by state. So with that national contract, they can go in and immediately start cross-selling. Or if they acquire a company that didn't have United Healthcare in that state, they can start supplying the people with United Healthcare insurance. And then they're also just started a national project with Cardinal Health to sell some of their products. They take on none of the inventory, none of that type of risk, but just being able to upsell people to Cardinal. So that'll be some incremental revenue for them also in the quarters ahead.
Awesome. All right, Aaron, thank you for joining us.
Hey,
great. Yeah, great update. Aaron's a prolific author at Seeking Alpha. You can find him there. Thank you so much. Have a great day, man.
Thank you, Ben.
Thank you so much for joining us.